Starknet has crashed 90% from its 2024 peaks. Right now, it's hovering near 7 cents. So the question on everyone's mind is simple. Are we looking at a fundamental death spiral? Or is this the birth of a new accumulation phase that could lead to 5 to 10 times returns in 2026? Today, we're diving deep into exactly what happened to Starknet and what could happen next. Part 1. Why the collapse? Here's where it gets interesting. Starknet is technically superior to its competitors. It processes transactions faster, it's cheaper, it has stronger cryptographic foundations than Arbitrum or Optimism, yet it trades at a fraction of their market value. This reveals something brutal about cryptocurrency markets. Technological excellence is necessary, but not sufficient. What actually matters is the network effect. Do developers want to build there? Do users actually use the network? Does the ecosystem attract capital? Starknet has stumbled on all three fronts. While Arbitrum has built a sprawling ecosystem with DeFi protocols, NFT platforms, gaming applications, Starknet remains relatively barren. It's like owning a Ferrari engine with no car around it. Impressive specs, zero utility. The three-part death trap. First, macro headwinds are crushing altcoins across the board. Bitcoin collapsed from its dream of 125, $0 down to 86, 0 to 90, $0 in January 2026. Ethereum followed suit, plummeting 40% from its August peaks. When Bitcoin catches a cold, altcoins develop pneumonia. Starknet, a layer 2 solution for Ethereum, was hit twice. Ethereum weakness plus the general rotation away from risk assets. The fear and greed index sits at 31. That's extreme fear territory. Confidence in the entire crypto market is shattered. Second problem, tokenomics. Every month, Starknet unlocks roughly 128 million new tokens. This goes on until March 2027. This vesting overhang means fresh supply constantly hits the market, suppressing price even when fundamentals improve. Imagine if Apple released 1.28% of its total shares every single month for the next year. The stock would struggle to recover even with great earnings. That's exactly what Strk faces right now. Third, competitive disadvantage. So we have macro pressure, tokenomic dilution, and ecosystem disadvantage all hitting at once. That's the three-part death trap. Part 2. Why Starknet actually matters. Now, here's what most people don't appreciate. Starknet uses something called Stark proofs. This is a cryptographic innovation that's fundamentally different from what competitors use. Where Arbitrum and Optimism rely on validity proofs that Ethereum can verify, Starknet uses probabilistic zero-knowledge proofs. These are theoretically more resistant to quantum attacks, and they scale even further into the future. In November 2025, Starknet deployed its upgraded STU prover. This dramatically reduced the cost of computing proofs. They also released version 0.14, one with network performance improvements and better developer tooling. These technical victories matter for the long term, but in 2026, they only matter if they translate into real adoption. The ecosystem shows life. Here's something the market is missing. Starknet quietly hit some important milestones. The network reached 1 million users recently. Daily DEX volume sits around $28 million. Perpetual futures volume exceeds $1 billion. Most critically, and this is the part that matters, 1 billion Strk tokens are staked across the network. That represents genuine faith from long-term believers who are locking up their tokens for extended periods. These aren't zero numbers. They suggest organic activity beneath the surface. The market is dismissing Starknet, but the actual ecosystem keeps grinding forward. Part 3. The 2026 Roadmap. Starknet's development team is betting everything on 2026 being a turnaround year, and they have specific catalysts lined up. The first one is Bitcoin DeFi integration coming in Q1 and Q2. Starknet plans to become the premier layer 2 for Bitcoin-based financial applications. This would allow Bitcoin holders to lock up their BTC and earn yield through DeFi protocols running on Starknet. Why does this matter? Bitcoin DeFi is one of the hottest trends in crypto right now. If Starknet can capture meaningful market share in this space, the entire narrative changes. The risk is that Arbitrum is already ahead through existing partnerships. First mover advantage exists, but second mover disadvantage is real too. Sequencer decentralization. In Q2 and Q3, Starknet is moving toward decentralized sequencers. This means handing control of transaction ordering from the company to a distributed network of operators. This is symbolically important for true decentralization. But does it unlock new value? Not really. Similar moves by Arbitrum and Optimism didn't generate outsized price appreciation. It's an engineering milestone. It's not a market catalyst. Post-quantum cryptography. Throughout 2026, Starknet is adding protections against future quantum computers. This is technically elegant, but it's also niche. Most users aren't losing sleep over quantum threats in 2026. Verdict on the roadmap. The team is ambitious. They're executing well on concrete features, but the roadmap lacks a true breakthrough catalyst. They're executing on features that don't solve the core problem: network adoption. What Starknet needs isn't better technology. It needs developers choosing to build there instead of Arbitrum. Part 4. The macro outlook for 2026. Here's the uncomfortable truth. Stark's fate is 80% dependent on Bitcoin and Ethereum price action, only 20% dependent on its own fundamentals. Base case scenario 50% probability. Bitcoin stabilizes throughout 2026. The crypto market oscillates between hope and despair. You get periodic rallies and sell-out. Strk bounces from 7 cents to 10 to 15 cents by March. Then it consolidates there through mid-year as vesting pressure continues to weigh on the market. By year-end, Strk trades in the 15 to 25 cents range. That's a 2 to 4 times recovery from current levels. But it's still massive underperformance versus 2024 highs. This is the consensus view among major analysis firms. Bull case, scenario 30% probability. Bitcoin recovers decisively in Q2 2026. Institutional capital rotates aggressively back into altcoins. Starknet's Bitcoin DeFi integration becomes a genuine breakthrough. It's the first real narrative driver the network has had. Staking continues, attracting serious capital. More developers take the bet. In this scenario, Strk reaches 40 to 60 cents by year-end. That's a 6 to 8 times return from current levels. That's the kind of upside that gets people's attention. Bear case, scenario 20% probability. Bitcoin drops below critical support due to a broader economic crisis. The entire crypto market enters panic mode. Vesting becomes an avalanche of selling. Strk collapses toward much lower levels. It becomes purely speculative. The project survives on technology and community, but it becomes marginally relevant for the next 2 to 3 years. Part 5. The metric smart investors watch. Most analysts focus on price and volume. Smart investors focus on one metric: TVL to market cap ratio. Here's why it matters. If a blockchain's market cap is way larger than the value locked in its applications, the market is pricing in hype, not usage. Let's compare the layer 2s. Arbitrum has $20 billion of market cap with $18 billion of value locked in applications. That's close to equilibrium. The market is pricing in actual usage. Optimism has $8 billion of market cap with $8 billion locked. That's balance. Starknet has $620 million of market cap with $221 million locked. That's a 36% ratio. Starknet is overvalued relative to its actual usage by 2 to 3 times. This suggests one of two things. Either Strk is overpriced and should fall, or TVL needs to grow 3 times to justify current valuation. Option 2 is possible in a bull market, but it requires sustained adoption momentum. It's the harder path. Part 6. Investment Thesis for 2026. For conservative investors, wait for Bitcoin to confirm recovery above key resistance levels. Then enter with a small position. 2% of your portfolio maximum. Give yourself a 12 to 24 month time horizon. Set your expectations for 3 to 5 times returns, not 10 times, not overnight. For active traders, Strk at current levels offers a classic technical setup. You have clear support below, you have clear resistance above. That's a swing trade. Stop loss at lower support. Target at technical resistance, 6 to 8 week time frame. This captures the potential bounce while minimizing catastrophic downside risk. For long-term believers, if you're genuinely convinced that Starknet's technology will eventually dominate layer 2s, keep accumulating. Average down if the price drops further. Plan to hold 24 months or more. Go through the full cycle. Part 7. The final verdict. Is this the worst-case scenario? Yes, it's absolutely possible. Vesting pressure is real. Competition from Arbitrum is brutal. Macro uncertainty is extreme. Is this a new cycle opportunity? Also, yes. The risk-reward is asymmetric to the upside. A 5 to 8 times recovery is realistic under favorable conditions. Most large altcoins bottom before they explode higher. They don't announce it. They don't warn you. One day you wake up and it's already happening. What makes 2026 different for Starknet? The network enters the year with concrete catalysts, Bitcoin DeFi integration, decentralization milestones. It has deep community support through staking. It has technical excellence that will eventually matter when the market rotates back to fundamentals. The next 12 months will tell you whether Starknet's superior technology can overcome its ecosystem disadvantage. That's an open question. But it's exactly the kind of asymmetric bet that generates outsized returns if it resolves positively. Watch Bitcoin. If Bitcoin breaks decisively higher in Q2 2026, Starknet's recovery chances improve dramatically. If Bitcoin continues lower, Strk becomes a value trap. The choice you face isn't between good and bad. It's between realistic downside and outsized upside. That asymmetry is why traders and investors are paying attention to Strk in January 2026. That's the story. The technology is there. The catalysts are lined up. The macro backdrop is uncertain. But the risk-reward? That's become extremely attractive.